Hello everyone, welcome back to the channel where we decode businesses and uncover investment worthy stories. Today we are diving into a fast growing tech player from India, KSolves India Ltd. Let's explore what makes this company tick and whether it deserves a spot on your radar. Incorporated in 2014, KSolves India Ltd began with modest roots, offering website maintenance and multimedia services. Over the last decade, it has transformed into a CMMI Level 3 certified software development firm, delivering high-end solutions across AI, big data, DevOps, and enterprise platforms like Salesforce and Odoo. With over 150 completed software projects, KSolves has proven its ability to manage fully cycle development from ideation to development and to deployment. KSolves offers a robust suite of services tailored for digital transformation. That includes artificial intelligence and machine learning, generative AI, big data and Salesforce integration, DevOps, MLOps and LLM ops, data analytics, ERP solutions via Odoo, and end-to-end digital transformation consulting. These services position KSolves as a strategic tech partner for organizations looking to scale intelligently. Talking about product portfolio, beyond services, KSolve has built a strong product ecosystem. Salesforce tools like Lead Manager Ninja, Rollup Magic, and Google Analytics Connector, Odoo apps including Dashboard Ninja with AI and WooCommerce Connector, Mind AI Ninja, a GenAI platform for intelligent automation. They also have Data Flow Manager, a big data tool that streamlines NiFi data pipelines. These products definitely reflect KSolve's commitment to innovation and automation. Talking about clientele and industry reach, KSolve serves a wide range of industries from IT and BFSI to telecom, edtech, healthcare, and media. Notable clients include Shakaware, Verified First, Echo 360, EVR Motors, and more. In 2025, the top 5 clients contributed approximately 40% of the revenue, while top 10 made up to 53%. What's impressive is that 82% of revenue comes from repeat customers, especially from the US and European markets, which shows a strong signal of client satisfaction and retention. KSolves operates across 30 plus countries with offices in the USA, UAE, Noida, Indore, and Pune. Its revenue split in FY25 looks like below: North America with 59%, India with 22%, Europe with 7%, and Australia and rest of the world with 6% each. This global presence gives KSolves resilience and access to premium markets. Talking about fundamentals, at current price of 316, the stock is trading slightly below its intrinsic value of 342, which may indicate a value buying opportunity. Its 52-week range shows it has corrected slightly from its high of 537. Company shows exceptional return with an ROCE of 172% and ROE of 154%, indicating high efficient use of capital. Its dividend yield of nearly 5% is quite attractive for long-term investors. With a PG ratio of 0.81, the stock seems undervalued when compared with its growth potential. KSolves has shown consistent earning growth with a 29% EPS growth over the last 3 years. Its strong free cash flows of over 78 CR in 3 years shows solid financial health and operational efficiency. On the technical side, stock's RSI of 44 indicates it is in a neutral zone, neither overbought nor oversold. Volumes remain stable, providing decent liquidity for investors. Now, talking about the profit and loss statement, KSolves has shown phenomenal top line growth from just 10 CR in FY20 to 144 CR on a trailing 12-month basis. Even though growth has moderated from 178% in FY21 to around 26% in FY25. The consistency is impressive for a small cap IT firm. Being an IT services firm, employee cost forms the bulk of expenses, averaging 40 to 50% of revenue. Other costs have been steadily reduced as a percentage of sales, showing operational efficiency from 31% to 18.93%. Operating margins peaked at over 42 to 43% during FY21 to 24, which is very strong. However, in FY25 and TTM, margins have slipped to 35% and 32%, indicating rising employee costs or pricing pressure in the IT sector. Net profit has grown from just 1 CR in FY20 to 14 plus CR in FY24. However, the sorry, net profit has grown from 1 CR in FY20 to 32 to 34 CR in FY24, or in recent years. Growth has flattened in FY25, showing the company may be entering a consolidation phase. Earnings per share have grown rapidly from less than 1 in FY20 to 14 plus in FY24. However, the TTM EPS of 13.4 shows some slowdown compared to last year. The company has rewarded shareholders well, raising its dividend payout ratio over the years. In FY24, nearly 68% of profits were paid out as dividends, making it attractive for income-seeking investors. In summary, KSolves India has grown its revenue more than 14 times in just 5 years with exceptional operating margins. While growth momentum is slowing and margins are under slight pressure, its strong cash generation and high dividend payout make it a compelling small cap IT play. Talking about balance sheet, the company has consistently built reserves, moving from almost nil in 2020 to 9 CR in FY25, showing profit retention and balance sheet strengthening. KSolves remains a debt-free company with liabilities mainly from trade and current obligations. No borrowings except a 9 CR short-term borrowing recently. On the asset side, KSolves has kept fixed assets light. Typical for IT companies, cash reserves have surged to over 10.5 CR, reflecting strong cash generation and liquidity. Talking about cash flows, operating cash flows have grown impressively from 1 CR in FY20 to 34 CR in FY25. This proves the business is cash generating and sustainable. Investing cash flows remain minimal as the company operates on a asset-light model. No heavy capital expenditure burden is visible. Recent investment in fixed assets reflects focus on the expansion. On the financing side, dividends have steadily increased, reaching over 36 CR in FY25. With a receipt of 9 CR from borrowing, nearly all cash returned to shareholders comes from profits. Talking about ratios definitely reveal strong fundamentals. With data days around 56, the company enjoys a healthy working capital cycle of 23. Most importantly, the ROCE stands at a staggering 172% in FY25, highlighting how effectively the company uses capital to generate returns. Talking on the shareholding pattern, the promoter stake remains strong at nearly 59%, reflecting confidence and no dilution. However, institutional participation is almost negligible, with FIs and DIs holding less than 2%. On the other hand, the number of retail shareholders has rocketed a bit from 3,000 in 2022 to more than 61,000 in 2025, showing growing retail interest in the small cap story of this company. So, on the final thoughts, definitely KSolves India Limited is a high margin, high growth tech company with a strong global footprint and loyal clientele. Its product innovation, service diversity, and financial efficiency make it a compelling story, but investors should weigh the premium valuation and recent earnings dip before jumping in. If you're looking for exposure in India's digital transformation wave, KSolves might be a stock to watch. Thanks for watching. If you found this breakdown helpful, don't forget to like, share, and subscribe for more deep dives into India's emerging businesses. Drop your thoughts in the comments. Thank you.